Hello everyone, Craig Rice, Patriots Credit Services. Today I wanted to get a little information out to mainly realtors and loan officers. This is very important for you to understand. Right now, the industry for credit repair is under fire, and it has been since about 2017-ish. There's a reason behind it, but it's very important for me to let you know and give you updates because your license could be at jeopardy. Yes, you could lose your license for sending borrowers or referrals over to companies that are not at 100% compliance, right? And really, unfortunately, it's your job to know because it's your license, it's your organization, and if you send a borrower or a client over to a non-compliant company, you're looked at of being the person at fault. And as well as a credit repair organization, I get it. But the best way I could compare it is if you have a driver's license and you're driving somebody in the car and they've got something they shouldn't have or doing something they shouldn't be doing, and you get pulled over, your license is at stake, right? It's the same thing. This is your organization. When you send over files to a non-compliant company or a company that is doing something wrong, then, mainly compliance, they're going to come after you and they're going to possibly take your license away. Okay, and I want to explain why. So it's not like stop using credit repair. Credit repair, if done properly, it works wonders. So it's very important. I mean, we get multiple files a day that would have never thought they were going to be able to be approved, and they get approved every single day, multiple people. There are many companies out there that could vouch for us. I myself have been doing this for 24 years. I started in the insurance industry in 1996. For those of the people that don't know, many do, but in 1996, the same year, the company started moving into doing mortgages, and we started doing that. And I want to paint a timeline for everybody, okay? And the reason being is, again, because it's important to understand what's going on and how powerful this could get. The top three credit repair organizations, and I don't want to say their names, but you could guess the top one a lot of people complain about. They've got 3 lawsuits against them. They've got a good argument going on, but as well as one that's all over TV, at least by us anyways, they've got 2 lawsuits against them. They're shutting companies down, like us. And if anybody saw, if you may have saw in the post, a couple days ago is, we're compliant. We've received our certification to show actually through the best organization I know of called OCM, Organization of Compliant Credit Account Managers. So let me paint a timeline of what's going on, why this affects you as a realtor or loan officer. It's very important to understand this. I'm going to try to make this as quick as possible. It's Sunday. I've got things I want to do with my family, but I wanted to make sure to get some stuff done here at the office, go do my family thing, come back, get a little more work done. But anyway, so this is what's going on. So like I said, 1997-ish is when I started doing mortgages, and I was actually doing credit repair at that same time. I was helping our clients' scores get high enough, my direct clients that were unable to be approved, and turning their file from denied to be able to be approved their credit. So that's how I got into the industry. So 1996 to 2007, when I was in the industry, you didn't have to be licensed. During that time, and way before 1996, loan officers used to get paid a lot more than they do now. Very lucrative business, but they, pretty much double the income back then. Back then, they got paid what's called front end points and back end points. And I might be telling you stuff you already know, but for the people or the listeners that do not know, this is what was going on. So before 2007, again, you got front end and back end points, but there were so many borrowers getting taken advantage of, homeowners and about to be new homeowners. They were switching people from 30-year fixed to 227s, 228, which is an adjustable rate mortgage. And when the loan officer did these types of files, or closed and got the borrower to take on that program, they got paid more money. So if they got in a 228, which means 2 years fixed, 28 years, it adjusts to the current market. Which means their payment usually jumps up a lot, sometimes by hundreds or even $1,000 or more, depending on the balance. But anyway, so what would happen is if a loan officer actually got somebody into a 228 or a 327 or whatnot of adjustable rate mortgage, they got paid extra. They got like a quarter or half a point, in the back. And what that means is a quarter or half a point is basically a percentage. So 1% is basically 1% of the loan amount. So if you've got a $500,000 home loan or a balance or purchase price, then that's $5,000 they got. So if they switched them to an adjustable rate mortgage, they got $2,500 or whatnot, added onto their check for that one closing, plus the closing costs they made, and plus the percentage of the closing costs, as well as the points on the back end. So let's move forward. Basically, a lot of people were being taken advantage of, a lot of Americans and consumers and whatnot. So the Federal Trade Commission and the government had to step in, right? And they had to say, no, you're not doing this to our people, to our Americans, to our consumers, our homeowners. And they basically made everybody get what's called an 031 licensed loan originator, or become one. And that was, a federal, state background check. They had, as well as tests. They had, calculations, marketing, the Real Estate Settlement Procedure Act. You had to know all this stuff, pass the test, and then you could continue soliciting mortgages. So what that did is that took all the bad apples out of the industry, and it got them out because so many people were being taken advantage of. Well, because of all that crap that was going on from these fraudulent or bad apples in the industry, basically, as well as many other things that was going on, but basically after 07, 08, 09, when the banks closed, they wouldn't accept any deals. People were going into foreclosure. Their credit card balances were really high. They were upside down on pretty much everything. They couldn't refinance anything, purchase anything. Many people lost their whole lives during this time. So then what happened was the debt settlement industry stepped in, debt negotiation, even loan modification companies, and they basically started, not all of them, but they started taking advantage of the homeowners and consumers and Americans again. So in 2011 or 2012-ish, the Federal Trade Commission stepped in and they said, no, you're not doing this to our consumers, borrowers, Americans. Basically, they pulled out something called the TSR, which is a rule. It's called the Telemarketing Sales Rule. A lot of people think that the telemarketing word means only for phone call, which it does not, because the telemarketing sales rule, if I'm correct, was passed in 1995. So since 1995, there's been a lot of other means of communication, right? You've got email, you got robocalls, you got all these different things going on. You got chat online. All this stuff is included into the telemarketing sales rule. So what the telemarketing sales rule says, amongst many other things, but the main thing that they said is, after 6 months of the promised results, you could then be paid. So if they enrolled a client into the debt negotiation or debt settlement program, they couldn't be paid for 6 months until after the promised results. So if the promised results took 3 months, then the 6 month clock starts ticking and they can't get paid till 6 months after that, right? So what that did is that kicked out or took out a lot of companies that couldn't maintain their files. Listen, if you're a business owner, if you don't have at least 6 months, 12 months, maybe even up to 2 years or 3 years of working capital to continue your business, then you should probably maybe look elsewhere, get some funding or whatever, and basically start, reanalyzing what you're doing. Because, if you're a business, you need to have working capital if the money stops right now. That's just the way it works in business, not just credit repair, not just debt settlement, everything. So that's what they did. So in 2011, 2012, when they pulled out the TSR and they slapped it on the table and says, you can't be paid unless, and this, that, and third. So then what happened is, again, it took all the people out, and over time, A lot of things have changed in the financial industry, pretty much every industry, and everywhere you look. But then the credit repair organization started popping up everywhere. People woke up in the morning and said, "I'm just feel like I'm going to be a credit specialist today." And they just started telling people that they know how to delete things, and you could delete everything on your credit. I'm going to delete them in 3 days, and all this nonsense and bullshit, right? So the reason why I'm saying this is because they're still out there, and that's why the TSR, really the Federal Trade Commission, had to step in, and they have, which is awesome. This is great news. This gets rid of the companies that can't continue to produce without money and not be able to, they're not doing the right thing. They're there to take the money and go to the next file. They use outsourcing companies. They don't do their files themselves, and that's okay. I'm not putting them down. If you're a credit repair organization, that's okay, because we let credit repair organizations outsource to us, and we're the ones actually fixing the credit, right? And it's not them. They're just kind of the front end people. They're using their company name. It's completely legal, and they basically get the files. They send them over to us. We charge them a monthly fee for every dispute round that we're getting things removed and whatnot. So their timeline is in 2016 to 17 they started trying to take out the big dogs, and they're in court, and they've been for years. There's a good argument they have, okay, and I'll get past this quickly so I can let you know the exact reason why I created this video. Their argument is basically, the TSR in 1995, when the rule was established, basically says that you can't get paid for 6 months after the promised results, right? But then the Credit Repair Organization that came out in 1996, which is an act, went through Congress or whatnot, says you cannot promise results. So there's a conflict there, and the big company's main one, Credit Repair Organization, is saying, no, listen, you guys are telling us that we can't promise results, but then you're telling us we have to promise results, and we don't get paid until 6 months after the promised results. So it's actually a great argument. There might have been a decision or a ruling within this last week or this week. I don't know. I have to check the legal documents, the court docs, and go through it and see exactly what happened. But either way, all the credit repair organizations were under fire. So how does that hurt you as a realtor or loan officer? Well, they're going through the databases, and they're going to see in the softwares and databases that it's you from ABC Mortgage Company or whatever real estate firm who sent the file over. And then they're going back to you. And they're basically saying, well, if it wasn't for you, John or Jane Doe would have never been hurt, because they would have never been referred over to this non-compliant company. So what is the job for the realtor or loan officers or whatnot? Make sure that the company's compliant. Like us, we went through a very detailed audit. You've got to have a surety bond. You've got to have, there's so much you have to have, and you get, I don't know where the certificate is. It's on the wall, but we were awarded that, part of National Association of Credit Service Organization as well. So they need to, loan officers and realtors need to look into exactly, the company itself. It's very important that they're compliant, because again, that's going to affect you as a professional license holder. You may not be one, in the future, if you're sending files to a non-compliant company. So I just wanted to get this out there really quick. I know I kind of blew through that quickly. If anybody ever has questions, you could reach out to me, Facebook, Instagram, Craig at PatriotsCreditServices.com. You could contact me. My phone number's on Facebook there, or go to PatriotsCreditServices.com. Either way, be careful. If you're working directly with a company now, ask them if they have their certain certifications, and ask for their surety bond number, ask for the policy number. Make sure they're in compliant. Make sure that they have no federal or government really actions against them. Check the reviews. A lot of these reviews out there with these credit repair organizations, they're bought. We see them all the time. We check different companies as well as, OCOM, which again is the organization of compliant credit account managers. Best company out there. I suggest that every credit repair organization get involved with them, because if you don't, you're gonna be out of the industry. I mean, bottom line, you have to get involved. They're there for you. They're not there to criticize. They're not going to say, no, you don't have this. You're non-compliant. We're not letting you do business, because they don't do that. They basically give you a map of how to succeed. They give you extra tools to help your clients, as well as let you know what you don't have and how to get it. It's just, there's nothing better out there. But anyways, when you go back to the reviews, you go to people's reviews and you'll see 5,000 of them or whatever, which is great, or 10,000 or whatever. But there's parts of Oakham and other companies out there that investigate this and see that you've got the same exact verbiage on all these different websites on the reviews. They're fake reviews, As an example, with our reviews, our clients want to do them, right? When they are able to be approved, or when they get approved, or they close on the home, they want, hey, how can I fill out a testimonial form? How can I give you guys a testimonial? These things, they're fraudulent, they're dishonest, and there's so much more out there that these companies are doing. But anyways, do your due diligence. Watch out. Be careful. This is your license, not ours, right? And these companies will take your client's money and nothing will happen. But anyways, Craig Rice, Patriots Credit Services. If you ever have any questions, concerns, reach out to me in any way, okay? Thank you.